First-time home buyers in the GTA, hidden facts that can save you thousands. Introduction. Buying your first home in Toronto isn't just a financial decision, it's a strategic move that can either position you for long-term stability or create unnecessary pressure if you misunderstand the process. In a market as competitive and expensive as the GTA, clarity is everything. Knowing whether you qualify as a first-time buyer, understanding how mortgage pre-approval really works, and preparing for the true cost of closing can save you thousands of dollars and prevent costly mistakes. Understanding first-time home buyer status in Ontario. Generally, you are considered a first-time home buyer if 1. You have never owned a home before. 2. You owned a home in the past but have not lived in it for at least 4 calendar years. 3. Your spouse or common law partner has not owned and lived in a home during that same period. This status gives you access to valuable programs such as land transfer tax rebates, the First Home Savings Account, and the RRSP Home Buyers Plan, all designed to reduce your upfront costs and improve affordability. Mortgage pre-approval. What it really means. A mortgage pre-approval is one of the most important early steps, but also one of the most misunderstood. What it island. A lender reviews your finances and provides 1. An estimate of how much you can borrow. 2. A locked-in interest rate, usually for 60 to 120 days. 3. A conditional indication that you qualify for a mortgage. Think of it as you are likely approved if nothing changes. What lenders look at. 1. Income. Employment type, whether salaried or self-employed. Consistency and stability. 2. Credit score. Ideally 650 or higher, with stronger scores getting better rates. 3. Debt levels. Lenders calculate GDS, gross debt service, and TDS, total debt service ratios, to determine how much of your income is already committed. 4. Down payment. Minimum requirements are 5% for homes under $500K. 5% to 10% for $500K to $999K. 20% or more for homes over $1 million. What you actually get from pre-approval. 1. Your budget range. For example, you may be approved up to $650,000. This is your maximum, not what you should spend. 2. Rate hold. Locks your interest rate and protects you if rates increase. 3. Stronger offers. Sellers take you more seriously, especially in competitive Toronto markets. What pre-approval does not guarantee. 1. It is not a final approval. 2. The lender has not reviewed the property yet. 3. Your financial situation must remain unchanged. Final approval depends on the property appraisal, your job stability, and whether you take on new debt. Documents you will need. 1. Government ID. 2. Proof of income such as pay stubs and T4S. 3. Employment letter. 4. Bank statements. 5. Proof of down payment. 6. Credit check authorization. If you are self-employed, you will need at least 2 years of tax returns and additional documentation. Smart strategies. Most buyers miss. 1. Get pre-approved before shopping. This prevents you from pursuing homes outside your budget. 2. Do not max out your budget. Leave room for property taxes, condo fees, maintenance, and future rate increases. 3. Avoid financial changes after pre-approval. Do not take on new debt, change jobs, or miss payments before closing. Estimating your buying power in Toronto. A common guideline is that you can afford about 4 to 5 times your income. Examples. 80,000 income supports roughly 320,000 to 400,000 purchase price. 120,000 income supports roughly 480,000 to 600,000 purchase price. Toronto reality. 100,000 income with 5% down typically supports 450,000 to 550,000. 150,000 income supports roughly 650,000 to 800,000. Affordability is impacted by condo fees, interest rates, and strict stress test rules. Closing costs, the hidden expense. Closing costs in Toronto typically range from 1.5% to 4% of the purchase price. What they include: 1. Land transfer taxes. Ontario tax plus Toronto municipal tax. First-time buyers can receive rebates up to about $8,475. 2. Legal fees. Typically $1,200 to $2,500 including title search and registration. 3. Title insurance. Usually $250 to $500. 4. Home inspection. Approximately $400 to $800. 5. Mortgage insurance if under 20% down. Adds about 2.8% to 4% of the mortgage amount. 6. Appraisal fee. Around $300 to $600. 7. Property adjustments. Reimbursements for prepaid taxes, utilities or condo fees. 8. Utility and moving costs. Account setup fees, deposits and moving expenses. 9. Condo-specific costs. Status certificate and legal review fees. Example: Toronto condo at $700,000. Land transfer taxes about $20,000. First-time buyer rebate reduces this by about $8,475. Legal and other costs about $4,000. Estimated total closing costs $15,000 to $20,000. What buyers often miss: 1. Closing costs must be paid in cash. 2. They are not included in your mortgage. 3. Underestimating them can delay or stop your purchase. A simple rule is to save at least 3% of the purchase price for closing costs. Conclusion: buying your first home in Toronto requires more than just a good income. It requires strategy, awareness and discipline. Understanding your first-time buyer status, securing a proper mortgage pre-approval and preparing for closing costs gives you clarity and control in a competitive market. A pre-approval gives you direction and confidence, but it is only the beginning. The most successful buyers are not the ones who borrow the most, they are the ones who plan the smartest. When you align your budget with reality and prepare for every stage of the process, you move from uncertainty to confidence, and that is what ultimately puts you in the strongest position to win in the Toronto market.